and gentlemen, welcome to Darasa April 2022 Block Revision Program for Advanced Financial Reporting and Analysis. April 2022 Block Revision Program for the paper Advanced Financial Reporting and Analysis. I want to take you through the first question of the revision, which is on a topic called share-based payments. Share-based payments. So basically, as far as this topic is concerned, you are supposed to know what is share-based payment. Share-based payment refers to payments to suppliers of goods or services, either using cash, which is based on the equity instruments of a firm, or using an entity's equity instruments. There are usually three types of share-based payments, namely equity-settled share-based payments, equity-settled share-based payments, cash-settled share-based payments, and choice-settled share-based payments. So those are the three types of share-based payments. And then from there, you need to know how to do the calculation part of it. Now, I want us to go straight away because I know that you are conversant with basic concepts. I want us to take you through a question on share-based payments from November 2016, question number 4C. November 2016, question number 4C. The question reads, as part of staff motivation program, Beta Limited decided to grant each of its 600 employees 100 options to purchase the company's share effective from 1st of April 2016. The options were conditional upon one still being in employment as of 31st of March 2020. The following additional details were provided with respect to the scheme. You have been given the year, the number of employees expected to leave, and the fair value of each option. Then below that, you've been told that the fair value of the options was 25 on 1st April 2016. That is what we call the grant date. And the exercise price of the options will be 12, and the par value of the company's share is 6. The market price of the share over the 4-year period to 31st March 2020 is expected to be 25. Required. Show how the above transactions, or show how Beta Limited should report the transactions of the above scheme as per the requirements of IFRS 2 share-based payments over the 4-year period ending 31st March 2020. Assume that all the eligible employees will exercise their rights as of 31st March 2020. Solution to that question. Solution. You'll have here cumulative expense, expense for the year. The first year is year ending 31st March 2017. The cumulative expense, you take the number of employees, the original number of employees. The original number of employees, as I can see from the question, was 600 employees. But 25 employees were expected to leave in the first year. So 600 minus 25. The number of options being granted are 100. And then we use the fair value as per the grant date. The grant date is the first date when the shares were floated to the members. And in this case, the grant date was 1st of April 2016, and the fair value as per that date was 25. Then you multiply with the weighting factor. We are having a vesting period of 4 years. So year 1, we are going to weight it as per the vesting period, which is 1/4. Then you use your calculator to do that. This gives me 600 minus 25 times 100 times 25 times 1 divided by 4. I'm getting 359,375. And since it is year 1, the expense for the year will still be 359,375 because it is 359,375 minus 0. Then we proceed on to 31st March 2018. Another 15 employees left. So 600 minus 25 minus 15 times 100 times 25 times this time we are in year 2, 2/4. So let's go. 600 minus 25 minus 15 times 100 times 25 times 2 divided by 4. I'm getting 700,000 as a cumulative expense. And therefore, once I subtract the cumulative expense of the previous year of 359,375, I get 346,25. Then I proceed on to the year ending 31st March 2019. I'll have 600 minus 25 minus 15 minus 10. All that times 100 times 25 times this time 3/4. 600 minus 25 minus 15 minus 10. All that times 100 times 25 times 3 divided by 4. 1031,250 minus 700,000. I'm getting 331,250. Then I proceed on to the year ending 31st March 2020, where I'll have 600 minus 25 minus 15 minus 10 minus 10 again, times 100 times 25 times 4/4. So 600 minus 25 minus 15 minus 10 minus 10 times 100 times 25 times 4/4. It gives me 1,350,000. I subtract 1031,250. I get 318,750. And basically, that is how the transactions should appear in the books of Beta Limited, such that when it comes to the marking, The examiner will mark 1, 2, 3, 4, 5, 6, 7, 8. Therefore, that is how you account for a share-based payment scheme. So, in case you have a question, you'll kindly raise it using the appropriate platform. Thank you.